And I will share my screen. All right, so let's log in to my business course, and we'll go to the ebook, chapter 1, go to the end of chapter 1, and we'll start with some short exercises. Even though, so let me pull up the document that I have put on Blackboard as well. Let's see. I'll just go to it in my Dropbox here. So I had uploaded this document to Blackboard, which is a, let's see, where is it? This document right here, which were some recommended problems you could do at the end of each chapter. And I said, we'll try to work these in class, and then the TAs will work these. Or I'm sorry, we will work these in class, and then the TAs will work these. So I'm definitely going to do these today, but I also want to do some other ones in addition to those. For example, I want to do one that talks about what Taylor was asking. So let's start with a short exercise. Let's see. I mean, we could just start with this first one. So short exercise 1.1. Match the following forms of business organization with a set of attributes that best describes that form of business. So the 3 forms of business organization we talked about on Tuesday were sole proprietorship, partnership, or corporation. In which of, so A, shared control, unlimited liability, tax advantages, and increased skills and resources. Which of those 3 forms of business is best described by those attributes? You guys can put in the chat if you want to. Let's see. You guys are saying partnership. Yes, good. I guess what I could do is upload this, when I get done putting the answers here on this PDF, I'll save this as a PDF and I'll upload it to Blackboard. That way you guys have the answers, at least the ones we've done in class. Right, that's a partnership. All right, B. Please mute your mic if you're not going to ask the question, so you don't disrupt the class. Best for raising large amounts of funds, double taxation, limited liability, easiest to transfer your ownership. Right, corporation. See, these are easy, but at least we get these right. This is good. There are a fair number of questions on the exam that are like this. I would call these qualitative questions. You don't have to calculate anything. There are a fair number of questions on the exam that are like that, especially the first exam. But all 3 exams do have questions that essentially just require you to pay attention in lecture, look at the PowerPoints, qualitative sorts of things, definitional sorts of things. All right, and then C, by process of elimination, must be the sole proprietorship. Sole ownership gives it away right there, the word sole. Most common form of business is a sole proprietorship. I could go off on a little bit of a tangent. To answer a question that was asked on Tuesday that I didn't answer, someone asked, what's the difference between an LLC and a corporation? An LLC is a limited liability corporation, and it's the same as a corporation in the sense that the owners enjoy limited liability. They're only liable for what they put in. So legally, they're only liable for what they put in. And they're different though. LLC and corporation, the main difference is the owners of a corporation are its shareholders, but the owners of an LLC isn't allowed to issue any shares. It's just a one or two or more, a group of people who decide to start the business, and they own the company, and they form an LLC. As far as as far as taxes go, the IRS allows the LLC to pick how they want to be taxed. They only have two choices. They can either pick, they can be taxed as a partnership or taxed as a corporation. If they're taxed as a corporation, then the LLC would be subject to double taxation. Any profits that the LLC earns would be taxed at the corporate income tax rate. And then if the LLC distributes any of those profits to any of its owners, which likely they would, how the owner's going to make money, then when the owners get the profits, they have to pay tax on the profit at their income tax bracket rate. So that's the difference. I told you the difference between LLC and corporation. It's kind of a legal sort of difference. And that's why I didn't really want to get into it last time. But Bradford raised his hand.
Yeah, I was just wondering if transfer of ownership is like difficult in an LLC.
Yeah, it is, because they don't list their stock on a public exchange and there's no stock. Trying to find a new owner, or if you want to get out of ownership and give your ownership interest to someone else, or recruit new owners, new people to give money to the LLC so they can be owners, that's hard to do. That's right. Alexis, good question, Bradford. That's a good question. Alexis asks, is the test mostly fill in the blank, short answer, true, false, multiple choice, or a mixture? The whole test is multiple choice. There's 50 questions on each exam. Each question, you choose one of 4 possible answers. All right, let's keep going here. Tyler raised his hand. What's your question, Tyler?
So what would the benefit be to being taxed as a corporation as an LLC? Like at that point, wouldn't it just be better just to be a corporation versus an LLC? Because I feel like the benefit to an LLC is that you could get taxed as a partnership and still have limited liability, right?
Yeah, that's if you choose to be taxed as a corporation, you might as well just be a corporation. You're right.
Okay.
Then you get to enjoy all the benefits of being a corporation. Whereas if you taxed as a corporation but still remain an LLC, you don't get to enjoy those benefits, but you have to face all the costs. You're right. Your logic is correct.
Okay, thank you.
So LLCs almost always will choose to be taxed as a partnership, which means that the income earned by the LLC is not taxed at the corporate income tax rate. When the LLC distributes the income to its owners, then the owners treat it as their own personal income. It's taxed once at their income tax bracket rate. So that's right. There are other differences, and there are technical differences, legal sorts of differences, but Amanda said something, but I don't know what she just put a dash. I don't know what your question is, Amanda. I'm going to keep going so we can get through some of these. All right, let's do SE14. Your TAs are going to work through some of these as well. Match the following organizations with the set of accounting guidelines. So which one of these organizations determines GAAP? Is it the FASB, the Financial Accounting Standards Board, which is headquartered in Norwalk, Connecticut? Or is it the International Accounting Standards Board, which is headquartered in London, England? FASB, that's right. GAAP is the set of rules and principles that govern United States corporations. And the FASB is the governing body that sets GAAP. Which means the IASB, the International Accounting Standards Board, is the governing body that sets the International Financial Reporting Standards, or IFRS. IFRS here. All right. to kind of answer Taylor's question at the very beginning about going over a statement of cash flows. We're not going to really talk much about the statement of cash flows, like making a statement, until chapter 12. But the statement of cash flows, the cash flows are divided into 3 categories, and this question gets at those 3 categories. So we have the operating category, investing category, and financing category. So let's work through SE 1.5. And we have A through H. And they're going to give a little description of something, and then you decide whether it's either operating activity, investing activity, or financing activity. So day-to-day business activities. Is that operating O, I, or F? Good, good, good. What about purchasing land for a new warehouse? Is that operating, investing, or financing? Right. Any purchase or sale of a long-term asset like land, equipment, buildings, things of that nature is an investing activity. Selling of merchandise inventory. Now, merchandise inventory, we're selling an asset, but it's not a long-term asset. So what is this? Yes, oh, this is a company selling their product. That's an operating activity. Any cash flows arising from the sale of inventory would go in the operating activity section of the statement of cash flows. D, obtaining a new bank loan. Yes, financing, good. We're borrowing money. We're financing. Is obtaining a new bank loan, there are 2 types of financing. There's debt financing, and that's financing, that's money we acquire that we have to pay back with interest. And then there's equity financing, and that's money that we acquire, and in exchange for it, we don't have to pay it back, but we have to give up ownership in our company in the form of shares of stock. So is obtaining a new bank loan debt financing or equity financing? Right, good. Debt financing. It doesn't ask for that, but we can put that. Payment of dividends. This is a tricky one. We're paying our shareholders a dividend out of our profit that we've earned this year from our operating activities. We're paying them a portion of that as a dividend because they own shares in our company. I thought a lot of people would say financing. This is actually an operating activity. In the statement of cash flows, it would be listed in the operating activities section. And the rationale is, where is this money how is this money generated? It was generated from our operations, from selling our products or services. Let me check the answer key and make sure that that's right so I don't lead you guys astray. Answer key actually says financing, but on the statement of cash flows, this goes in the operating activities section. So I'm going to call it operating. It's really operating. I think there's a mistake. Remember, dividends are operating. They're paid out of our money that we've earned as a company. So don't forget that. F, investing excess cash. Right, exactly. No, somebody says O. Investing excess cash. I mean, the word itself, investing activity. So sometimes there can be a little ambiguity. But I mean, the implication here, this excess cash, they're buying some long-term asset. They're investing it. G, purchase office supplies. Right. Operating activity. Good. And then finally, selling old equipment that is no longer needed. Is it operating, investing, or financing? I see a lot of O's. I saw one I. I see another I. Remember I said purchases or sales of long-term assets. Equipment is a long-term asset. Is always an investing activity. So selling old equipment that's no longer needed. I mean, think about it this way. We're Coca-Cola. How do we earn our money? We sell Coke. Selling some old piece of equipment, we're not in the business of selling equipment. That's not how we make money. So if we sell some other asset other than the asset that we're in business for, then it's an operating activity. I mean, then it's an investing activity. I'm sorry. If we sell a building, if we sell land, if we sell equipment, unless that's our primary business, selling equipment. Like if we're John Deere and we sell a tractor, that's an operating activity because that's what we do. But if we're Coca-Cola and we sell one of our tractors, that's an investing activity because we sell Coke. The tractor we have is just used, I don't know, to dig out something for our building. Who knows? Does that make sense? Hopefully that makes sense. Can you explain it, G, a little more? Lauren asks. Sure, let's go back to G. When you purchase office supplies, to figure out G, you kind of do it by process of elimination. Are we buying or selling a long-term asset? No. Office supplies are a short-term asset. They're just used in our office. And our office exists because we got to have someone manage our operations. I guess it depends on which office, but any short-term asset, any day-to-day expenses are operating, and this is one of those. So it's not financing, obviously, and it's not investing because we're not purchasing or selling a long-term asset. So it has to be operating. Does that help a little bit? You're welcome. Thank you all for engaging in this process of going through some of these exercises. This is good. All right, let's do SE16. We had a couple more questions. Let's see what they are first. David says, do we have access to these questions on my business course? You do if you purchase the ebook with your My Business course, which I said you should do. So David, you would just go, when you log into My Business course, it would bring you here. You won't see this. You'll just see this. And I imagine it looks similar as it does on my screen. And you just go to read. If you have any other questions, ask me in an email or ask one of the other students who've already purchased the ebook with My Business course and they know how it works. But I hope that helps you, David. And then, of course, the chapters are over here. We're in chapter 1 right now. There are the other chapters down here if we want to go look at like chapter 5 stuff or whatever. So you can read the chapter, and then at the end of the chapter, you can go through the different exercises. The end of chapter stuff is divided into short exercises, sets A and B, and problem sets A and B. All right, SE16. Whoops. Let's get rid of this, make this full screen here. Which financial statement would each of these items appear on? And there are 4 different financial statements we told you about last time. There's the balance sheet, the income statement. Well, in order, you prepare the income statement, then you prepare the statement of stockholders' equity, then the balance sheet, then the statement of cash flows. So A, assets. Which statement are those on? Balance sheet, great. Balance sheet reports the ending dollar value, so the dollar value at the end of a period of all your assets, your liabilities, and your owner's equity accounts. So BS stands for balance sheet, not the other thing that you frequently see BS used as. How many of them are there? 8 of them. All right. A through H. Do we have a question? No, people are still answering. Yeah, balance sheet. Good. What about revenues? Which financial statement? Income statement, right. Income statement lists for this year, for this time period, the changes in the asset and liability accounts. And those can be broken down into revenues and expenses. How about cash flow from investing activities? Statement of cash flows, right. Anything regarding cash flow is on the statement of cash flows. D, stockholders equity. Where does that appear? And it could appear on more than one. Right, the ending balance in stockholders equity shows up on the balance sheet. Jared says it also shows up, and Emily also says, it also shows up on the statement of stockholders equity. The statement of stockholders equity explains the change in stockholders equity balance from beginning to end of year. And then the ending balance of stockholders equity goes on the balance sheet. So it actually shows up, stockholders equity shows up on both the balance sheet, or maybe I should put the statement of stockholders equity first, because that's the statement you have to prepare first to get the ending balance, and then the balance sheet. So it appears first here, and then here. All right, do we have a question? Devin asks, will you be posting the answers you're doing now online for some study review? Yes, Devin, I'll put these, once I save this, it'll save as a PDF, and I'll upload it to Blackboard where I upload the other stuff. I'll make a folder called in-class practice solutions, and then it'll be in that folder. You're welcome, Devin. Hannah asks, will you post the recorded lectures? Yeah, Huji, look at Huji's answer. The recorded lectures are posted on YouTube. I already posted the one we did on Tuesday on YouTube. The link to where the lectures are on YouTube is in the syllabus, and the syllabus is on Blackboard. All right, let's continue. Expenses, where would you find expenses? Which financial statement? Bradford says the balance sheet. Jared says the income statement. Jared's right, income statement. Expenses and revenues are on the income statement. Income statement lists all the revenues, then the expenses, and then the difference between the total revenues and the total expenses. If the difference is positive, we call it net income. If it's negative, we call it net loss. All right, let's continue. Net change in cash. Which statement shows the net change in cash? Statement of cash flows, that's right. That's exactly what the statement of cash flows purpose is, to explain the change in cash. If one of the choices was just cash, where does cash show up? It's not one of the 8 things we have to identify, but cash shows up on the balance sheet. The ending balance in cash is on the balance sheet. But what other financial statement is the ending balance in cash also on? Not the income statement, Lauren. Ending balance in all assets is on the balance sheet. So cash is an asset, ending balance is on the balance sheet, that's true. But the ending balance in cash also shows up on the statement of cash flows. The statement of cash flows, remember, the beginning balance in cash, which was the ending balance last year, that's there. And then the ending balance in cash is there. And the difference between those is the change in cash, and that's what the statement of cash flows is trying to explain. It puts that change in cash, whether cash went up or down, whatever that change is, it breaks that change down into the 3 categories: operating cash flows, investing cash flows, and financing cash flows. Explains that change in cash. All right, let's continue. G, net income. Net income shows where? Tanya, good answer. You're right. It shows both on the income statement first, and then we take net income and it goes on the statement of stockholders' equity. What part, Tanya, of the statement of stockholders' equity does net income appear? There's two things the statement of stockholders' equity shows us. Yes, Tanya, you're right. Retained earnings. There's our contributed capital, which we call that common stock. So changes in common stock is detailed on the statement of stockholders' equity. And also changes in our earned capital, or AKA retained earnings. Changes in our retained earnings are detailed on the statement of stockholders' equity. And net income in a given year is part of the change in retained earnings. What else, Tanya, is part of the change in retained earnings? So we have beginning retained earnings plus net income minus something equals ending retained earnings. What is that something? Anyone? Dividends, that's right. Good. So H, liabilities. Which financial statement? That's an easy one. Balance sheet, good. Only on the balance sheet. There we go. All right, let's do some maybe more involved questions. Let me create a new page here. We have this new page. And let's do the ones that I uploaded or that I said I would do. So this document on Blackboard. Let's do exercise 1.8a. Then we'll do problem 1.4a and problem 1.6b. And then we'll be done. So 1.8a, exercise 1.8a. We got to go to the next page, get past the short exercises, get past the short exercises over the appendix. You're not required to know the appendix for this chapter. I said that at the end of last lecture. Exercise 1.8a, right here. Do we have a question? Let's see. All right. Determining net income. Yeah, if you guys want to, you guys can teach each other, send each other private messages about answering each other's questions. That works as well. It's part of the learning experience. The beginning and ending balances of retained earnings for the year were $50,000 and $65,000 respectively. If dividends during the year were $0, so they didn't pay any dividends, what was the net income or the net loss for that year? So this goes right along with what you guys are talking about. We need to use what equation to answer exercise 1.8a? Which equation do we need to use? You're right, Bradford, the answer is 15,000. But what equation do we need to use? You guys are right, the answer is C. we need to use the retained earnings equation, right? So use the retained earnings equation, which is what, you might wonder? Well, it's just the beginning retained earnings plus net income, or plus net loss if this is a negative number, minus dividends equals ending retained earnings. Now the problem gives us, so this is one equation and it has 4 unknowns. The problem gives us 3 of the 4 unknowns. So that means we have one equation and only one unknown, and we know we can solve for that unknown. So it gives us the beginning retained earnings, 50,000. We don't know what net income is. It tells us dividends were 0, and it told us at the end of the year retained earnings had a balance of 65,000. See, beginning and ending balances of retained earnings were 50,000 and 65,000 respectively. Dividends were 0. So we can solve this equation for net income. Let's move this up a line. So that implies that anytime I write this, all that means is the above line implies. So you'll see me write that a lot. The above line implies that if you solve for net income, you get 65,000 plus 0 minus 50,000, or 15,000. You guys did that really quickly in your head, which is good. Let's do problem 1-4A. This one will be longer. Let me first see though if we had any more questions while I was doing that. Yes, Alexis. Net income minus dividends is the change in retained earnings. So here's the retained earnings equation. The change in retained earnings, which often the change is abbreviated with a Greek delta sign. So the change in retained earnings is just ending retained earnings minus beginning retained earnings. So if we put beginning retained earnings over on this side, what's left on the other side? Just net income minus dividends. So the change in retained earnings is net income minus dividends. That's right, Alexis. I don't want to confuse you guys, so I'll just, this equation is right, but I'm just going to get rid of it because that's all you need to answer this problem. All right, let's do problem 1-4A. If I'm going too quickly, somebody say something. Let's get to the problems. So the exercises, there's an A set and a B set. The B set aren't any harder than the A set. They just take the numbers and change them. Same exact problems, they just change the numbers pretty much. The problems though are harder than the exercises, and the exercises are harder than the short exercises. Move to the problems. Problem 1-1, 1-2, 1-3, 1-4, this one. The following is balance sheet information for Tuttle Janitorial Service Incorporated. Incorporated means they're a corporation. At the end of 2019, in this first column, and the balances in these accounts at the end of 2018 is in the second column. So if you think about the year 2019, this is the beginning balance in these accounts, and these are the ending balances in these accounts. And that's another thing in accounting. December 31st, 2018 is the same day as January 1st, 2019, essentially. The end of one year is the beginning of the next. That throws people off sometimes. Notice there are some question marks here. So it says, prepare a balance sheet as of December 31st of each year. So we need to prepare 2 balance sheets. Whenever you prepare two balance sheets, but you put them together in one document, it's called a comparative balance sheet. So you have a balance, you essentially have two columns, one for 1 year. One will have the balances in the asset, liabilities, and owner's equity accounts in 1 year. And then the next column will have the balances in the same accounts the previous year. So you try to do the most current year first. That's the first step we need to do. So you guys are going to learn the format of a balance sheet. We talked a little bit about the format. So here's a balance sheet that prepared in good form. You first list name of company. And they told us it was Tuttle Janitorial Services. Then name of statement. So you're either going to put balance sheet, income statement, statement of stockholders equity, or statement of cash flows. They want us to prepare a balance sheet for this company, so we'll write balance sheet. And then the third line is what time period. Now remember, of the 4 financial statements, only one of them reports, it's a financial snapshot at a moment in time. So the balance sheet, for the time period, you use the words as of. This is the lingo you use. For the other 3, you say for the year ended, representing that it's stuff that happened over just that year. As of means this is what's going on as of the end of this year since we started as a company. So as of, now we're going to have 2 balance sheets, right? So as of 12/31/19 and 12/31/18. Whenever you have 2 balance sheets in one, it's called a comparative balance sheet. So maybe I should, instead of calling this a balance sheet, I'll call it a comparative balance sheet. Comparative, that way you use that word because you can compare 1 year to the next in the same balance sheet. And I'm sorry if my handwriting isn't, that's one thing that's one of my weaknesses. My handwriting is not the best, especially if I write fast. So that's the heading of the balance sheet. This is how you would head the balance sheet. And then we will list the accounts over here on the left. Here are all the accounts. Now these accounts are all jumbled together. The balance sheet, you first start with the assets. That has to come first. So we're going to have a subheading called assets. And then technically, you would have another subheading for the current assets, then another subheading for the long-term assets. Well, we'll get into more detail regarding the format of the balance sheet in the next chapter. But for this chapter, just think one category, assets. And you want to list the assets in the order of liquidity. Liquidity means how quickly the asset could be converted to cash. So cash would always be the first one listed because it's already cash. You don't have to do anything to convert it to cash. So we're going to put the beginning balance in cash. I'm sorry, the ending balance in cash, 25,000. Then the beginning balance in cash, 22,000 in the next column. So we'll have one column as of this date, one column as of this date. So cash began the year with the $22,000. It began 2019 with a $22,000 balance, and it ended the year with a $25,000 balance. Next asset in order of liquidity, and they've already put them in the order for you. Accounts payable is not an asset, by the way. Anything that says payable means the company owes that. It's a liability. So cash is the first asset, then accounts receivable. Beginning and ending balances, 31,000, 39,000. We already have the dollar sign here, so we don't have to keep putting dollar signs. The user knows that it's in dollars, US dollars. Next asset, it's a long-term asset, land. Began the year at 46,000, ended the year at 56,000, which means we purchased $10,000 worth of land this year. Our land went up by $10,000. Oh, whoops, I put the wrong numbers. 46 to 56, not 36 to 46. Oops. And that's another thing. Sometimes I make mistakes when I'm going quickly. So if I do, just let me know. Somebody asked a question, so I'll try to answer here. No, I don't see any questions. Next asset is building. And the word net means, so this $250,000, that's what our buildings are worth at the end of 2019 after subtracting their depreciation. So net of depreciation. That's what the word net means. Same thing with equipment, net of depreciation. The long-term assets that are tangible, tangible means have physical substance. You can touch them or feel them. Other than land, are depreciated. Land's not depreciated. Long-term assets that are intangible, which lack physical substance, they are amortized. And we'll talk about that in later chapters. Examples of assets that are amortized are things like patents, copyrights, trademarks. We're just keeping it simple for right now, though. So building went from 260 to 250. Equipment went from 46 to 44. Every year, building net of depreciation will go down, right? Because we're going to add more depreciation, the building value is going to drop. The book value of the building will go down. We'll talk about depreciation in later chapters. We'll get there. All right, we had some questions. Let's look. Pamela says, or no, first we have Tyler. Aren't liabilities listed on the balance sheet? They are, Tyler, in the liabilities section. We're in the assets section right now. Pamela says, so it's the worth of the building after depreciation. That's right, Pamela. Jason says, how do you know the order of liquidity if it's not already in order? You're going to learn it. Just, you're going to have to memorize which assets are more liquid. You're welcome, Tyler. We'll get to it as we go, Jason. You'll practice it and you'll learn it. So those are all the assets. No, that's not true. Mortgage payable is a long-term liability, but supplies is an asset. Supplies is the last asset. And actually, you should put the current assets above the long-term assets. So I'm going to go stick the current supplies as the current asset. And we'll define what current and long-term assets are next chapter. But for now, stick supplies right here. Its beginning value was 16,000, and then it ended the year valued at 18,000. Now you get a subtotal. Total assets. And we add up for 2019 and for as of the end of 2019 and as of the end of 2018. So we can add it up here. What do we have? 25, 39, 18. Actually, I'm not going to spend the time to do that here. I'm just going to look at the answer key because that will just take up unnecessary time. You guys can add the numbers together on your own. Let's go have a look. What problem was this? 1, 4A. 432 and 421. So I have the answer key open on my other computer, my desktop, which is right in front of me. All right, now we move to the liabilities section. We have a subheading. And remember, the balance sheet summarizes the accounting equation. And the accounting equation is assets equal liabilities plus stockholders' equity. So we're going to get a subtotal of the assets. That's right here. Then we're going to get a subtotal of the liabilities and a subtotal of the owner's equity, and then the total of those two subtotals as a subtotal to confirm that this equation holds. The balance sheet should confirm that this equation holds, both at the end of 2019 and at the end of 2018. It has to hold at any moment in time. So liabilities. First one I see on the list is accounts payable. Anything with a payable in the name is a liability. It means the company is liable to pay it. Accounts payable, we're going to define what each of these are. I'm not really talking about what each of these things are, but accounts payable, I'll just give you a preview. These are dollars owed to the company's suppliers. So at the end of 2018, they owe them $9,000. At the end of 2019, they owe them $6,000. I mean, they're going to pay it off, of course. But at a moment in time, if we decide to make a balance sheet, we have to list what's the current value of that liability. At the end of 2019, it's $6,000. At the end of 2018, it's $9,000. Question? Let's see. Yes, Jason. David asks, what does accounts receivable mean? Yeah, I didn't really talk about that. We're going to talk about that next chapter. But accounts receivable, like this $39,000 balance at the end of 2019, this is money that the company is owed. The customers have received products or services from Tuttle. In this case, services. They're a janitorial service. So Tuttle has done some janitorial work for a company, and the company still hasn't paid Tuttle yet. In fact, multiple customers may have not paid Tuttle, but Tuttle's already done the services. So this 39,000 represents services we've already done for people that they haven't paid us yet. You're welcome, David. All right, let's, we've already done cash, accounts receivable, land, building, equipment, mortgage payable. You guys probably know what that is. The company has a owes on some asset. They owe some money. They have a mortgage on their factory, on this building here, and the value of it, $88,000 at the end of 2018 is the liability they owe, and at the end of 2019, $93,000. So you might wonder, why did it go up? You would think after a year they paid it off, paid some of it off. Well, they did pay some of it off on one of them, but this mortgage payable is the sum of all the mortgages they owe. They might have several mortgages on several assets, and during the year, yeah, they paid off some of them, but some of them maybe they acquired some new assets, you know, and they took out new loans. So the net effect of all that is mortgage payable, which is a long-term liability, went up by $5,000, as you can see. Supplies we've taken care of. All right, so we haven't, well, that's it for those are the only two liabilities. So the total liabilities, 99,000 as of the end of 2019. And what is this, 97,000 as of the end of 2018. And now we look at our stockholders' equity. And stockholders' equity, two parts, contributed capital and earned capital. The contributed capital we call common stock. And common stock had a balance of 225 at the end of 2018 and 225 at the end of 2019. So it didn't change in balance. This represents the money that has been given to us by the people who own shares of stock in our company. As of the end of 2018, that much had been given to us. And as of the end of 2019, we don't have any new shareholders. The same amount has been given to us. Now, current shareholders may have transferred their shares to someone else. But as long as they're not new shares that are given out, that won't change. When current shareholders just transfer amongst themselves, this doesn't change. Pamela says, will those always be the only two liabilities for a company? Most definitely not, Pamela. There are often many other liabilities like wages payable. This chapter 1 is just really briefly introducing the financial statements. We're going to get into it though in more detail in chapter 2. What you should come away with from this chapter is just the format of it. Just notice not so much what each asset or liability actually is, not that, but just the format. Look, we have a heading. This is what the heading looks like. We have the categories. Know what the categories are. That's what you should come away with this from, the format of it. And then after common stock, there's retained earnings. Now, retained earnings, the ending balance and retained earnings. It doesn't give us the ending balance in 2019 or the beginning balance in 2019 or the ending balance in 2018. It doesn't give us either one of those. What it does say is we do know that there were no dividends paid in 2018 and there were $12,000 worth of dividends paid in 2019. So we need to figure out what's the ending balance and retained earnings. So we know this retained earnings equation. Retained earnings at the beginning of the year plus net income during the year, which we don't know, minus dividends during the year, which we do know for 2019, equals retained earnings at the end of the year. So retained earnings at the beginning of 2019 is this number. It's the retained earnings at the end of 2018, which we don't know. Net income for 2019, we aren't given. Dividends for 2019, it said was $12,000. And the retained earnings at the end of 2019 is this number right here, which we don't know. So we have one equation. It has 4 unknowns, and they've only given us one of them. Can we solve? No. So we must have to use a different equation to find the ending balance and retained earnings. We're not going to be able to use this equation. So that's not going to help us here. But if that's what you thought to do first, good. That's what you should think to do first. Anytime you're dealing with retained earnings, think of that equation first. It may or may not help you. For this, though, the equation we're going to use, remember the balance sheet, make sure this equation holds. And we basically have everything here. We have all the assets, check. That's this number for 2019 and this number for 2018. We have the total liabilities at the end of each year, check. That's this number for 2019 and this number for 2018. So we can solve for the ending balance in stockholders' equity. Now, stockholders' equity is comprised of these two things, this and this unknown for 2019, and it's comprised of these two things for 2018. But if we know the sum of these two, then we can solve for the question mark, right? So that's the procedure we're going to go about. That's how we're going to do this. So we're going to put a total down here, total stockholders' equity. We actually already can solve for the total. We know that 225 plus question mark we know what it has to equal, because we know this equation right here has to hold. So stockholders' equity at the end of a year, if we solve for it, equals assets minus liabilities, right? So at the end of 2019, our assets minus our liabilities has to be equal to our total stockholders' equity. So 432 minus 99, 432 minus 100 would be what? 332, and then we subtract another 1,000. So at the end of 2019, stockholders' equity has a balance of 330,000. At the end of 2018, following the same logic, stockholders' equity has a balance of whatever the total assets minus the total liabilities are. 421 minus 100 would be 321. But if we subtract 97, then we add three more thousand, so 324. Now we can solve for the question marks. So the ending balance and retained earnings as of 2018. So 225,000 plus X equals 324,000. What's X? $99,000. That's right, Alexis. Good. And at the end of 2019, 225,000 plus X equals 333,000. What's X? 108,000. That's right, Anthony. So the ending balance at the end of 2019 in retained earnings, 108,000. And there's our balance sheet. We finished part A. Let's do part B. I'm going to get rid of this. I'm just going to rewrite this equation at the top. All right, let's do part B. First, let's go and see if we had any questions while I was doing that. Jared says, can you also figure out retained earnings because assets equal liabilities plus owner's equity? And we already know the total assets and total liabilities. Yes, Jared, you were saying that before I told you that. You were right. That's right. That's exactly what we did. Good. B, prepare a statement of stockholders' equity for 2019. Hint, the increase in retained earnings is equal to the net income minus the dividends. We already know that the change in retained earnings is net income minus dividends. That's from the retained earnings equation. So in part B, we're preparing a statement of stockholders' equity. So it has a heading. It looks very similar to this. So I'm going to copy and paste this. How do I copy? I believe this copies it. The only thing we need to change two things, right? We need to change the word balance sheet to stockholders' equity, or statement of stockholders' equity. And I'm running out of room, so let me move this over. And then we need to change these words. The statement of stockholders' equity is a periodic statement. It's not as of. It's what happened during the years of 2019 and 2018. So for the years so you use this phrase for 3 of the 4 financial statements. And then for the balance sheet, you use the phrase as of a moment in time. All right. keep in mind on the exam, you won't have to prepare financial statements because all the questions are multiple choice, right? So I'll test the format of the statement, your knowledge of the format of the statements. I'll test it in a multiple choice format. And I will post a practice exam before exam 1. So you guys will have an idea of what to think about for this. All right. Statement of stockholders' equity. We're trying to explain the change in stockholders' equity. So there's two parts of stockholders' equity. There's common stock and there's retained earnings. So we need our beginning balance in common stock. We need to add any or subtract any changes, but common stock didn't change, right? Whoops, I need to move this up. Move this up right here. So common stock began the year. Oh, I should change this. For the years 2019, there's only 1 year the statement of stockholders' equity is covering. It began the year with 225,000. So at the end of 2018, beginning of 2019, there's 225,000 in stockholders' equity. This number. And then it ended the year 12/31/2019, right here. It ended the year with the same amount. So there was no change in common stock. And then retained earnings, I'm just abbreviating as RE. It began the year with right here 99,000, and it ended the year at 108,000. What's the retained earnings equation? Beginning retained earnings plus, so what do we add? Net income. Net income this year, I'm going to move this over here so I can have some room to write the word net income. Net income, well, we're going to solve for that. That's X. And then we subtract dividends. And we know what dividends were in 2019. They were $12,000. Right? It told us that right here. So $99,000 is what our retained earnings had in it at the beginning of the year. During the year, we paid out $12,000 in dividends, but at the end of the year, we ended with a $108,000 balance. So we must have had some net income. So solve for X. What's X equal? Someone said 21,000. Someone said 3,000. Someone said negative 3,000. So 99,000 plus X minus 12 equals 108. I'm thinking X needs to be 21. And another thing, a subtraction in accounting, you always put parentheses around it. So dividends are subtracted, so we're putting a parentheses. 99,000 plus X minus 12,000 equals 108. So solving gives X equals to 21,000. You can do it down here, 99,000 plus X minus 12,000 equals 108. And then rearrange, solve the equation for X. So if that's the equation, then that implies that X has to equal 108,000 plus 12,000 minus 99,000. I'm just putting everything else on the other side and isolating X. So X has to equal 21,000. Hopefully that's pretty straightforward. So the net income in 2019, 21,000. It's okay, Huji. I know you probably know how to do it, even though you said 3,000 or whatever. That's that problem. Any other questions in regards to problem 1.4a? So I guess I need to change this to for the year. And usually they say for the year ended. No, they don't. Just for the year, that's fine. For the year 2019. Maybe move this over. There we go. All right, let's do the last one and then we'll be done. So the last one we're going to do is problem 1.6b. So let's jump ahead to the B problems. Problem set B, and we're doing number 6. Oops, I went too far. So this says the first year, so that's important. This is the first year the company has been in existence. So what does that mean about, it's giving us a bunch of accounts and their balance at the end of 2019. So what's their balance at the beginning of 2019 or at the end of 2018 if 2019 is their first year? 0. That's right. Good. When you do these problems, and especially on the exam, the wording is really important. Before you just start going and randomly start calculating stuff, read the wording really carefully. The first year records of R. Levitt Interior Decorator show the following information for the year ended December 31st, 2019. What do we need to do? With this information, we need to make an income statement for 2019, and we need to make a balance sheet as of the end of 2019. So this is R. Levitt Interior Decorator. So part A, the heading of the income statement, name of company, name of statement, and then my writing is terrible. I need to take my time for the year 2019. You might say, why do I need to say for the year? Well, because sometimes companies make quarterly income statements, and those would have for the quarter, for the first quarter 2019 or something like that. So that's why we put this wording. All right, income statement. We have our 2 categories. Revenues first. List all the revenues. Get a subtotal of the revenues. And then expenses. List all the expenses and their values, and then a subtotal. And then take the difference between the total revenues and the total expenses. If you get a positive number, you call it net income. If you get a negative number, you call it net loss. So if we come back here, let's find revenues. Decorating fees earned. There it is. There's their revenue. Decorating fees earned. Anytime you see the word earned, that's revenue. Or I would just call this, you call it decorating revenue, I just call it fee revenue. They charge a fee to decorate. And during the year, the total fees that they earned, $57,600. Are there any other revenues on here? I don't see any. Usually the revenues, the list of revenues is very short. Companies usually only have very few revenue streams, but many ways to spend money. So since there's only one revenue line item, we don't need to have a subtotal for revenue. I mean, there's only one, so that is the total revenue. Now we go to the expenses. We got a few of them. And it doesn't really matter which ones you put first here. I guess we can just go in alphabetical order. Advertising expense. Or let's just go in order of, I don't know, it doesn't really matter. I'll just do it in order from left to right. Insurance expense first. $1,600. Then we have supplies expense, $8,100. Then we have our miscellaneous expense of $1,200. And then over here we have our advertising, oh, we have more stuff over there. Miscellaneous expense. And again, we're not going to talk about what are these various expenses. That's not really important for this chapter. It's just knowing the format of the income statement. Miscellaneous expense, and then we have advertising, salaries, and rent. Then we can get a subtotal of the expenses. So salaries were what? 36,000 and rent expense 4,500. So our total expenses are, and let me just go to the answer key so I don't have to add all that up. Save a little time here because we have 10 minutes left of class. And I want to get through this one. Total would be 52,100. There's the total revenue. And so we take total revenue minus total expense, and that looks like it's a positive number, and that we call net income. If it was a negative number, we would put parentheses around it and call it net loss. But it's a positive number. So 57,600 minus 52,100 is what? 5,600? 5,500? So there's our net income. And there's our income statement. Part B, balance sheet. We prepare our income statement first. Then we should prepare the statement of stockholders' equity. But it doesn't ask us to do that. It asks us to prepare a balance sheet, part B, right here. As of 12/31/2019, so the heading, same as this, but we can just change the wording a little bit. Change the name of the statement and change the year designation thing. Another way they word this is they say for the year ended 12/31/2019. So for the year ended or as of, either way. And we know with balance sheet, we're going to have our asset category. Probably gonna run out of room, but all right, assets. I don't see any assets over here. That's a liability. These things, that's a revenue, that's expense, expense, expense. That's common stock and that's retained earnings. So that's stockholders equity stuff. So supplies, cash, accounts receivable, those are our assets. So if we list them in order of liquidity, cash first, then accounts receivable, then supplies. We'll talk more about the order of assets in chapter 2. And then we can get a total. So cash was 6,200, accounts receivable 8,600, supplies 6,500. 86 and 65. And so our total assets are 21,300. So this is one way to do the balance sheet like we've been doing. We just do it vertically like this. Another way to do it is to put the assets on one side and then the liabilities and the owner's equity like over here on this side, horizontally. Either way is fine. I'm gonna keep doing it vertically though. But just so if you see in the book, they do it, excuse me, they do it both ways. So I don't want you to get it confused. Liabilities, we have anything with a payable. So accounts payable is 2,800 and then notes payable 6,000. I guess those are the only two. You might wonder what's a notes payable. We'll talk about that later. Essentially, it's just money we owe the bank for taking out a loan. Mortgage payable also is money we owe the bank for taking out a loan. They're different though, notes payable versus a mortgage payable. Mortgage payable is where you took out the loan and you bought some asset, or you bought you bought like a building or something. And notes payable is you took out the loan and you used the money for something else. The wording is different. 6,000 and 2,800. In this course, you'll learn that semantics, how you word things, is important. You kind of just have to memorize these things. Just learn the way, learn the language of accounting. To learn the language, like a new language. All right, this is 8,800 total. And then finally, our owner's equity or stockholders' equity. You can call it stockholders' equity or owner's equity, either one. It looks like I'm running out of room here. You know what? Since I'm running out of room, I'm just going to put it over here. Hopefully that doesn't bother anyone. Usually wouldn't do that. You put liabilities over there with it if you're going to do it this way, but I'm just going to do that. Actually, I could do that, couldn't I? I would have room if I did it that way. Put this over here. I'll do a horizontal balance sheet. All right, stockholders' equity, we have our common stock at the end of the year has a $7,000 balance. At the beginning of the year, it had zero balance. All these accounts had zero at the beginning. This is the first year of business. Retained earnings at the end of the year, we don't know. We have to figure it out. At the end of the year, retained earnings has a balance of, and then we got to get our total stockholders' equity. Again, we're going to use the accounting equation to find what the ending balance of retained earnings is. But we don't have to use the accounting equation. We could also use the retained earnings equation. In the previous problem, we couldn't use the retained earnings equation. Remember, we tried that, but there were 3 unknowns, 1 equation. You can't solve an equation that has 3 unknowns. But in this one, so in this previous one, we had to use the accounting equation to get, remember, we had to use the accounting equation to get this number and this number. But in this problem, we can use the retained earnings equation because we know what net income is. So again, we know the retained earnings in the beginning of the year, plus the net income during the year, minus the dividends during the year, equals the retained earnings balance at the end of the year. And that's what we want to put. This is what we want to put right here, right? So, retained earnings at the beginning of the year is 0, because this is the first year the company's been in business. Net income during the year came from our income statement, $5,500, right here. Minus dividends. What did it say about dividends? Did they pay any dividends? It didn't say anything about dividends. Failure to say anything about something means they didn't have, you can assume safely that there were no dividends. That you can always use that logic when you're doing these problems. It doesn't have to say dividends are 0. Just not mentioning dividends implies dividends are 0. So then at the end of the year, the ending balance from retained earnings is just our net income for the year. Just happens to be that. And so our total stockholders' equity is 7 plus 5 is 12,500, looks like. And if we add our total liabilities and stockholders' equity, and I think I forgot to do that, so I should just single underline this and double underline this. 8,800 plus 12,500 equals 21,300. So the accounting equation holds. Total assets equals the sum of total liabilities and stockholders' equity. I'm going to draw this right here. And I didn't do that over here, this problem. I should have. You not only have to get total stockholders' equity down here, but you also have to have a line item for total liabilities and stockholders' equity. So if we add the 99 and the 233, we would get the 432, which is the total assets. And if you add the 324 and the 97, you should get the 421, which was the total assets for that year, at the end of that year. I forgot to do that in part A of the previous problem, but you have to do that. You have to have, a subtotal for the owner's equity, but then you have to have the subtotal of the liabilities and the owner's equity, just to show the accounting equation is holding. And that concludes problem 1-6B. And it's 1 minute past our time. Does anyone have any questions at all about what we did today? And if not, I'm going to upload this to YouTube, and then you guys have a great weekend, and we'll meet back on Tuesday. Now, discussions will start next week, as well as my office hours. So I'll send out the link to my office hours and to the lecture that we're going to have on Tuesday. I'll send that out on Monday. Now, some of you have a Monday discussion. Just look in the syllabus to see which discussion section you're in, or look on your BU transcript or whatever. Like, it tells you what discussion you're in. Make sure you attend your discussion section. All right. Yeah, Emily has a question for me privately. I'll answer your question, Emily. But I'll answer that here in a second. But I'm gonna end the lecture here, stop recording, and you guys are free to go if you want. Have a great weekend.
Thank you.
You're welcome. All right, then how do I stop recording here? There we go.